Hello, everybody. Thanks so much for joining. This is our second Sansheets webinar. We did one about a month ago and it went really well. There were a lot of follow-up questions and interest in the models that we've made here at Santiment, as well as questions about how you guys can make models yourselves. So we thought it would be good to do a second one of these to go over our current existing models, how to actually unlock them, how to create your own, basically anything under the sun that has to do with Sansheets. But unlike last time where I talked a little bit about how to make your own model, this is going to be more about our existing models. And then, to start it off, a quick tutorial on how to download the existing templates that we have that predict price through various means of on-chain and social metrics, and how to make sure that you're using your API that you have with Sandbase Pro to its full extent. And of course, if you don't have Sandbase Pro yet, as a reminder, it's $45 a month for an annual subscription, $49 a month for a monthly subscription, and you will basically get 2 weeks free before you're ever charged. So that's a little bonus on our end that we provide to all of our new users. And after that, you'll basically have an API code. Now, with that API code, you'll want to go to sheets.santiment.net. I'm not going to do it myself now because my code is going to show and I don't want to reveal that. But basically all you have to do is go to sheets.santiment.net and you will see in your avatar, which is going to be in the top right over here, a place where you're gonna be able to just copy your code, and you're gonna go to any of the models or any Google Sheets page, that is, and simply go to add-ons, and you'll want to go to get add-ons. And you'll want to type in Santiment, or it might be, Santiment works just fine. And you'll see this pop up, Sansheets. You'll click on that, you'll install it, very simple. Almost all of you have gotten at least one extension on a various browser at one point. It works just like that. You download it, then you will essentially have the extension. It'll automatically show up here in add-ons. You'll want to go to Sansheets, API key, and then you'll want to hit, you'll basically want to enter it. And when you enter it, you'll just copy it from sheets.santiment.net, paste it, and it'll be good to go. And it'll automatically tell you that it's integrated. You can click on validate, which will show you that that key has been approved. And then you'll automatically be able to use any of these Santiment formulas, such as Sand Holders distribution, which is a brand new metric that we just released today. And I put together a quick model as kind of a bonus debut for all the people that are with me here today. You guys are going to get the first views and glimpses and cracks at it as far as beta testing it, checking it out yourself, seeing what I've uncovered by putting this together, and it's really cool. But before I show that off, I just want to point out, for those who didn't make the call last time, when I sort of introduced how to use Sansheets from scratch, you'll just want to go to equals San here in the formula bar, and you'll see all of these different ones pop up. Now, there are a lot more than just these dozen or so that are showing right now, but you can actually go to our Santiment Academy, which I'm actually going to do right now really quick and show you. And I'm going to go to Sansheets. Let's see, Sansheets should work. And this will give you a quick tutorial, sort of like what I'm talking about right now. Max wrote this up. He's currently running the YouTube channel. You guys can thank him for putting this great write-up together. You'll see a tutorial here, and then you can actually go to functions right here. And this will show you every single function that you can actually pull directly from our database and get auto-updating, real-time metrics, either hourly, once a day. Some are daily, some are intraday. It depends on what kind of metric it is. But this is really, really cool, guys. If you're into data and you want to make your own models, this is the way to do it. I've used many of these to create some of the models that I'll be showing off today, as well as some of the other people on our team. And you'll essentially get all the resources and information on what the metric is, how to use it, how to enter it right here. So going back to the model that I just mentioned, I put together right before this call, it's pretty cool. So many of you who follow our Twitter or have been in our Discord, you may be familiar with Holder's distribution. And what Holder's distribution tells us is the amount of tiers, not the amount of tiers, the amount of addresses within a range of tokens being held at any given time. So essentially, what I'm doing here is showing what those top end holders are doing and the amount of addresses that are actually in that prestigious tier that would be considered whale status. They can range from like, you know, around 200 addresses for smaller tokens that are still getting their legs to, you know, 2,000 to 3,000 for a coin like Bitcoin that has, I don't even know, tens of millions, if not hundreds of millions of addresses now. So what this is telling us is the amount of, or the percent change from the normal amount over the last 30 days that these amount of whale addresses have changed. So for example, you see this orange line, and I was talking to Gary before the call, this may show up as red to some of you, but it's orange on my screen. This orange line is Wi-Fi, and it's telling me that over the last 30 days, Wi-Fi's whales, which there are 196 of as of today, and I've qualified whales for Wi-Fi to be 1 million or more tokens held, because if I went to something like 100,000 or more, it would launch up to something like 4,000 or 5,000 or even like 7,000. I can't remember the exact number, but it was so much higher that I felt that 1 million would be the good sort of baseline for what a whale is. So of these 196, it was at about 163 a month ago, which is why you're seeing such a sky high jump here. Now, for those of you who actually follow Wi-Fi, you'll notice that the price has actually gone up substantially. And it happened very recently, just over the last, I think, 4 to 5 days or so. And guess what? Wi-Fi, as of 4 days ago, was actually below its average over the last 30 days. And all of a sudden, between the third and the fourth, it went up way above its mean, and that's when the price started to take off. That's not a coincidence. As many of you know, whale holders and whales in general tend to be the key holders for how prices fluctuate. And I think this is a pretty revolutionary thing that we're looking at right now, because it's giving us the insider status as to what they're doing. So if you, you know, all the things that you wish you had in the stock market, if you're in the stock market, we have it in crypto due to its more publicized nature. So this is essentially a way of looking at what those whales are doing at any given time, from an absolute metric data objective standpoint. And I think it's going to be pretty nice as we as a community try to improve this model, figure out ways to make it really tell a story. So as we can see here, I have Bitcoin highlighted. Bitcoin's actually on the rise. I've qualified Bitcoin whales as 10,000 or more tokens held. There are 22,353 of them as of right now. And over the last, it looks like 10 days in particular, things have really started to move up. And this is just from a percent gain. And if I went back like a year, you'd still see that Bitcoin is going like this, and it's definitely moving up and up and up. But just over the last 10 days or so, this is pretty significant, because it's telling us that, or I should actually say 12 days or so, because it's telling us that there are more and more holders. And if I actually went into data, if I went into the data tab here and I go to Bitcoin, this is where I sum up the amount of 1,000 to 10,000, 10,000 to 100,000, and 100,000 to 1 million token holders. And if we go back to the beginning, and apologies, this is actually over a 3-month span, not a 1-month span. So I misspoke there. But beginning on October 9th, this was at 2187. Now we're at 2353. That's a pretty big rise. So obviously there's something to be said about this, and I think that it's going to really be price predictive. As you can sort of see here, the black bars in the background is Bitcoin's price, and you can see that as the price has risen, Bitcoin is substantially over its mean over the last 90 days. Now I also have this chart, which I probably will improve in the near future. Um, this is the actual 30-day price change, or I'm sorry, this is actually 90-day price change. So I'm going to actually change that now. You can tell this is very raw, and I've just put it together. But I promise all the metrics are correct, and these are all um, telling the right story right now. So the blue bar is the actual 90-day price change in terms of percentage, and the red bar is that deviation from mean over time. And why is it saying 6.7? You know, I don't want to present it if it's telling something incorrectly here. So scratch this for now, but just know that when this is refined and when it's publicly available, it's going to basically tell you what the percent change over time is for price, and compare that directly to what those top tier whales are doing in terms of how many more or how many less whales there have been in terms of a change over that period of time. So this is one of many Sansheets templates. I've only got about an hour to show everything. So I'm gonna just leave it at that for now. If you guys have follow-up questions about this brand new model, just ping us in the Discord channel. Many of you have my personal handle on Discord, Brian, hashtag 2735. All right. So moving on to one of our, in my opinion, our most valuable models, and that is our MVRV opportunity and danger zone divergence model. What this is showing is the divergence between what the normal expected uh, rate is in terms of not accumulation, the average trader returns over time. If it's in red here, that means that trader returns are much higher than they are normally when combining 1-day returns, 7-day returns, 30-day returns, 90-day returns, 6-month returns, and 1-year returns versus those expected averages. So obviously, there's going to be like if we looked at just 1 day, for example, we'll see a lot of, Ripple had a great 1-day return. Elf, Bitcoin is up 5%. These are extreme uh, extreme returns on average for 1 day. But if we went to something like 1 year, you'll see percentages like plus 192, plus 148, plus 120%, etc. And keep in mind, these aren't just regular price changes for the coin. These are average returns of traders through all of the FOMO and the FUD and good mistakes they've made, bad mistakes they've made, etc. Generally, the actual price returns of crypto tokens are going to be higher than what the average trader returns are, because on average trader returns do worse than someone who just bought in 2015 and didn't do anything since, right? So um, my story that I'm trying to tell is 1-year returns are on average going to be either much higher or much lower than what you would see in just 1 day, right? So we have an algorithm that factors that in and averages everything together to show when it's past this danger zone or past this opportunity zone, blends it all together, and this tells you when it's in a combined average danger zone, when it's below this red dash line, or a combined average opportunity zone when it's above this green dash line, by combining 6 different time frames of average trader returns. Now I know that's a lot of information right there. There might be some clarification needed. Feel free to ask us in chat here on YouTube or ask us on Discord afterward. Totally down to give it more explanation. There's also an insight on our insights.santiment.net page that goes over this pretty substantially and crunches the numbers for those of you who really want a mathematical explanation. But long story short, as many of you would imagine, with crypto or Bitcoin on the verge of crossing 40K for the first time, who knows if it'll get there? I'm not going to predict that. Bitcoin average trader returns are about negative 2.3 deviations below the mean of what is considered a healthy overall MVRV when combining these 6 time frames all together. So if I look at each of these individual bars, the 1-day divergence is at about minus 168%. That means that it's in the top. If I went over all of history, the 1-day MVRV right now is in the top 5% in terms of average trader returns. And when people are in the top 5%, that's a bad thing. And it means it's a heavier risk than usual, right? And I have the same for all of these other various returns that are in similar, if not much worse, positions than the 1-day. So combining all these together, we're at negative 2.3, which is way below the red dashed line right now. This tells me that we're in a severe danger zone. It doesn't mean there's going to be an immediate correction. I was speaking with Maxim, our founder, about this just yesterday, and he explained that the markets can stay irrational for a long period of time. And as many of you remember, back in late 2017, when everyone was calling for the top at 10,000 and then at 12,000 and then at 14,000, it almost fueled the fire, because you need the markets to actually expect for prices to go straight to 100,000 in order for them not to. As crazy as that sounds, the markets tend to go in the direction of the path that is least expected. And right now, there are a lot of doubts that Bitcoin can actually keep chugging along at the historic run that it is right now. Therefore, you just have to keep these numbers with a grain of salt. But all things equal, there will be a point when these bars average out, and all of them are going to be at zero, given enough time and enough space to get a clear and concise average over days, months, and years. So keep that in mind. As of, I think, a week ago, many of these altcoins, for example, were actually close to this opportunity zone. And I had put a post out about it, suggesting that. And since that time, many altcoins have soared, wouldn't you know it? Even Ripple, which was very interesting. A lot of people thought it would just continue to plummet with all of its SEC news and the understandable FUD that was going on. I'm not going to give my personal opinion of it, but there was obviously some serious fear going on, and even Ripple has been churning along pretty well as of the last few days. So when you see a certain asset in an opportunity zone, it's generally a good sign. And we only have one right now on this model, but when you download it yourself, you will be able to add your own projects in. I'll show how to do that really quick here. On the data tab, you'll see many different projects showing up on line 1. This is pretty common with a lot of the models that I've made in particular, but you'll see this for other models that others have made as well. But I tend to put my projects right on line 1. If I wanted to change this to data for synthetics network token, I choose the longest name possible. You'll see it's loading, and instantly it has compiled synthetics network token in place of Ren. So if I went back, that would actually show synthetics network token right where Ren was. And right now it's alphabetized. So now it looks weird because synthetics is right in the middle of the R's. But yeah, it really is that simple, because all of these formulas are already plugged in to read based on whatever this model is. So it's pretty intuitive for those of you who are in need of this kind of model and want to use it. If you already have that API key because you're a Sandbase Pro subscriber, you'll just want to go to File, make a copy. I won't do the whole thing right now, but I just want to demonstrate how it's done. File, make a copy. We'll call it a copy of MVRV Brian. That's fine. This is a somewhat large file, so hopefully it doesn't take more than 10 seconds to do its thing. But either way, all I would need to do is, now that I have a copy, I should have edit access. But in order to use it, I'll have to go to add-on and enable Sansheets. And when I do that, it'll automatically start to show that the files are loading, assuming you have a legitimate API key, if that makes sense. So um, when you go to an actual file that's listed here, and these are listed on our website directly, if you don't see it on the site, just ping me or ping the general chat and we'll make sure you get these links. But you'll see all of these files. These are copies of the file, because if you use mine, I know that many of you could literally see my URL right now, type it in, but it won't work because I'm the only one who has access to it. This is the hub file, and we have public files here. So if you open a public file, um, it's essentially going to say that you have access, but it's view only, and you can't edit it, and you can't use it because the host uh, creator of the file isn't using any API key. They don't have an API key themselves. So in order to use it themselves, in order to use it yourself, you'll just want to make a copy and then enable that Sansheets API key, and everything will instantly unlock for you, and you'll see everything compile, and then you can edit the assets that you're most interested in if you'd like. Just remember that we do tend to have the most data on ERC20 coins. So if you're wondering why we can't see like top holders data for Cardano yet, it's something that we're in progress with. We don't have an ETA on when non-ERC20 coins will have the complete on-chain data that ERC20 coins do, but stay tuned for that. And just note that if you're not seeing data compiling, it's usually because it's not an ERC20 or it's a fringe ERC20 that maybe is still getting its legs and hasn't been integrated by our developers yet. But most ERC20 coins should be on there. All right, so that's that. These are where you get the files. They're listed on our website. You'll download the Sansheets, download Sansheets from the Google Play Store or the Chrome extension store, that is. Plug in your API, and then, oh yeah, last step. So on most models, you will see in the very top left on the data tab, so the very far right tab over here is almost always going to be the data tab for any models that I've made. You'll see a yellow cell here, and it'll say equals today plus one. If for some reason your data is not loading, you'll simply want to refresh this cell. You can do that a few different ways. You can literally delete it, and that'll make everything go away because it's not able to read what the end date of the data is. And then all you'd have to do is hit the undo button, and everything will come back, and it's automatically giving the data a manual refresh right now. You can also simply change the end date to today plus 0, and then back today to today plus 1, and that will manually refresh it as well. For a few of them, they're set to today plus 0 instead of today plus 1. Basically, long story short, whatever it's set at as normal, change it to something else, and then change it instantly back. Usually just deleting it and then hitting the undo button is the easiest way to refresh. So instead of having to refresh the entire model, which can take multiple minutes, this is much faster. So I recommend doing that if you're having trouble loading the data. It's usually just because it needs a manual refresh, and that's how. This isn't something that we can fix. We're kind of at the mercy of Google Sheets on this one, so keep that in mind. All right, we're already 25 minutes after. I'm going to keep the show moving. Next up is our exchange percent of supply model. And what this is showing is the amount of supply from a percentage basis for any particular asset that is currently being kept on exchanges. You'll notice here Ethereum is doing something weird, and we have to kind of ignore that one for now. But the rest of them are up to date, and I'll be fixing Ethereum in the near future. It looks like it's having some problems with like a different date set that's currently being compiled. So just ignore that for now. But everything else here, you can see most are in the green zone. That means that over the last 1 year, which this data is displaying, they are almost all in a position where the top 10 holders, this is the top 10 whale holding tab. The top 10 holders have a higher percent of coins being kept off exchanges, which is considered bullish, than on exchanges compared to what they have, compared to the ratio that they kept it on over the last year. So essentially, more coins are being gradually moved offline by the top 10 holders of every particular asset. It's a lot to explain there, but I promise you, long story short, you want to see lines in the green, and almost all of them are right now, which is definitely a great thing. Um, so that's just one. This is for top 10. This is for top 10 on exchange holders in particular. So this is essentially saying the total amount of coins that are held by on exchange whales are diminishing over time if they're in the green zone, which almost all of them are, um, and they are increasing for on exchange top 10 whales if they're in the red zone. So only one coin right now, looks like Gnosis, has more coins off or on exchanges, that is, compared to its past year. The rest are in the more of the off exchange mode, and there's less coins being held by those top 10 on exchange whales. Vice versa, we have off exchange whales, and this is showing what the largest non exchange whale addresses are and how much they're accumulating or releasing in terms of tokens at any given time. This one's more mixed. It looks like obviously we have Bancor, which we've posted about a few times. Bancor, for reasons related to DeFi, have had a few major increases in their off exchange supply, and at least a few of those are in the top 10 largest addresses. That's why you're seeing this huge increase. You'll also see Kyber doing really well, Ren, 0x. I think this blue line is Ethereum. So this would explain Ethereum's big ascension to over 1,200, among many other metrics, of course. So this is a very important chart. In short, all of these in tandem are very important. But this last one, I think, may be the most important. And this is just the overall supply, all of the tokens combined, and how their movement has been, comparing on exchange versus off exchange total tokens. And the percentage for about half of them, maybe a little more than half, are showing that they're still in the bullish range. Not quite as bullish on a consistent basis as the whale charts that we just looked at, but they are still showing that, you know, Band, for example, is far into the off exchange side of things right now, and that's very bullish for them. Bancor, as we just saw, Tether, which I keep, interestingly, on this chart because I think it does have some correlation, especially to Bitcoin's price. That's in the bullish range. Chainlink, we have Kyber, so on and so forth. This yellow, very bearish one looks like Gnosis again. So there tends to be a lot of correlation between the overall supply and the top 10 whales, as you may expect. And that's that. If there are questions for that, of course, leave them for the end. I'll be starting to go over them in about 15 to 20 minutes. This is our MVT model. Many of you OGs of Santiment may have seen us talking about this model pretty consistently on This Week in Crypto over the last year. We've done a little bit less of it as of the last couple months, but it's still tremendously useful. And especially right now, it's showing that in January, we're in our first pure bullish month, no more semi-bullish like we have been the last 3 months, first bullish month since December 2017. That's a big deal, folks. Now, obviously, sorry, my mic dropped out. Confirm, just let me know if you guys can't hear me right now. Otherwise, I think I'm good. Basically, first bullish month since December 2017. And what it's calculating is the amount of unique tokens moving on Bitcoin's network at any given time compared to its market cap. So as its market cap has been increasing, as we've closed in on $40,000 for the first time in Bitcoin's history, NVT has actually just increased even more, and token circulation is essentially through the roof right now, and that's why we're seeing this very bullish bar. The lower the bar, the better. We also have these trend lines, so that naturally over the course of time, when NBT uh, gets a little less, we still have trend lines to adjust for that, so that something that was semi bullish here, you can see that it's up. If I actually highlight it, it looks like it was at 131. If I went to 131 way back here, it would have been red, right? But because of trend lines, we can see that it's confirmed that it was semi-bullish, and price did exactly what this model expected it to do. Right when it gets semi-bullish or bullish, that's when prices tend to take off. Right when it gets red or orange, that's when prices tend to do this and do this. It's pretty darn good at predicting prices. Just keep in mind that this is a more of a long-term model. It's not going to be an intraday model, and you can't just look at January's green bar and say it's going to go up 10% tomorrow, right? We need to stay patient with a model like this and understand that it's a zoomed out perspective of the markets. You can also, of course, see Ethereum. I've got Link currently hooked up. Almost all of these are in healthy bullish ranges right now. But of course, just like I mentioned, you can get the link here. I list NVT as the third one down. Copy it, put it in your browser, download your own copy, plug in your API, and then you can plug in your own assets here simply by going to the formula bars and putting in a different asset and a starting date, etc. And it will do all the calculation for you. This is a very hefty model, probably our most hefty. So be patient, and you might have to wait 3 to 5 minutes before everything is compiled. Daily active address divergence. I won't go into this one too much. It's probably the one that we talked about the most on our This Week in Crypto calls over the last 3 months. I'm a big believer in it. However, it isn't without flaws. I believe that just like NVT, over time, divergences between daily active addresses and price will be will look more bearish unless it's adjusted for recency. So I've been working very hard to try to find a better algorithm to show what is recent in the markets, and it's doing a refresh right now, unfortunately. But if I give it a minute or two, it'll show some of these bars, and it'll explain that when the daily active address metric is going up at a substantially higher rate than price, prices are in a bullish range, and it means that over the course of time, prices will jump as long as daily active addresses stay at that high level. Vice versa, if price is higher than daily active address divergence when it comes to the course of history for that particular asset, that's when it's a bearish sign. And recently, we've been seeing lots and lots of bearish signals for both Bitcoin and Ethereum. And as I explained, I think this is partly due to a lack of adjustment for recency. If we look at like the last 4 years, as we do for Bitcoin and Ethereum's data, it's going to tell us that price has gone up much faster than daily active addresses have been. So it isn't a perfect correlation between the two. And I think, given a little more research, I'll have an even more predictive um, algorithm in place for this model that'll give better results. But here's what Bitcoin looks like as of now. This is using a 2-week, 6-week, and 10-week trend line all together, basically averaging what Bitcoin's daily active addresses and prices have looked like for the last 4 years. You see it just adjusted there to show how bearish everything is. And then it's taking the last 2 weeks, 6 weeks, and 10 weeks to give it more of a recent look. So daily active addresses need to still be constantly rising in order to justify the price. And right now they have not been. So this is kind of in contrast to what NVT is showing, with tons and tons of token circulation going on right now, giving this bullish divergence. Address activity is not getting that same increase. And that's why you're seeing this huge red drop off. Now, just keep in mind that I'll be working on this one a lot more, talking with our team a little bit about how we can better optimize this, because I don't think this is very helpful when we're seeing these neon reds, prices going up. It's just like, what can you do? So consider this one a work in progress, but the means and the proof of concept is there for you guys to experiment with if you guys would like. About 10-15 minutes till I take questions, so I'll try to continue to breeze through these last four. This is top transactions um, given calculation in USD. So this is cool because it's measuring the top 5 transactions over the last 3 months for each of these projects here. You can see the most massive one was a $535 million transaction for Gnosis in a single transaction. That's a big deal. You can also see these 2 Chainlink ones were very, very massive, $323 million transaction about 3 weeks ago. What this does is very quickly just give you some of the most popular assets and tell you what their 5 largest transactions were over the last 3 months, and it tells you how big they were too. So for example, we saw 2 static for 16.4 million and Decentraland for 9.7 million. You can adjust these assets to your pleasing, and the data tab doing all the work, just as I mentioned in row 1. Just find the asset you want to replace, put in your own asset, and it should be able to find it, assuming it's an ERC20 or at least a large cap coin like Litecoin, Binance Coin, XRP, etc. So yeah, not much to really say other than that. It's basically just a combined look at all the largest transactions, and it puts it all on one chart, which I think is really nice. So you don't have to reload 20 charts a day just to get the information that this chart does for you in one. All right, next up, top holder supply. So this one is pretty interesting. I don't know if I value it as my favorite, only because it's giving you a story about what top holders are doing in terms of the amount of supply that they hold. So it's more of like a way of looking at just how much of a monopoly the whales have on the entire supply. And the older the coin is, the less of a monopoly they'll currently have. You see Ethereum, as I mentioned on an earlier model, is having trouble right now pulling data, but most of them are good. These are strictly for ERC20s, so we can't even give you this data for Bitcoin. But if you're into a lot of ERC20s, like our staff are, you'll find it useful to see, when Maker, for example, they were holding, the top 10 holders were holding just about 50% supply 3 weeks ago. Now they're down to 46.5%. This is probably not so much due to whales releasing their tokens as much as it is smaller holders saturating the supply among more addresses, if that makes sense. So there are more addresses being made, and some of these top 10 holders may have secondary addresses. They could be distributing down to the smaller holders with small sell-offs, even though I'm seeing through our holder distributions model that is the case. And the top 10 whales are holding strong, but there are many factors for this. And generally, you want to see, you actually want to see that this supply by the top whales is diminishing, because it means it's a more healthy market, and there is less of an impact that can be had by a sudden whale sell-off. If Ethereum was loading right now, I think it would be showing at just 12 or 13% of supply. So if one whale decides to sell off in Ethereum, it's not going to have as much of an impact on the price as it would if one whale decided to sell off all their coins in status right now. The top 10 whales own almost 3/4 of that supply. So hopefully that makes sense. You can also look at it for the top 1 holder. This is a very bulky model as well, so it will have some delay in how long it takes to load everything, but it does work. We also have top 100 here. And then we have these charts that'll actually show, for example, top 10 off exchange holder supply, how much their cumulative change is in their total percent of the supply held for that token. So if we look at the leaders, we can see that this purple line here is showing that OMG is seeing a severe increase, which is not great news for the amount that's being held by these whales. Now, for the short term, it could mean that the price is going up, and I believe OMG has had a good couple of days here. But long term, it means that when whales do decide to sell off, it's going to be a more drastic drop for OMG if they decide to do that sell off than it would be if they were holding less like they were back here. So hopefully that makes sense. It's an interesting model that I want to study more. And hopefully when you guys download and use this yourself, you can come up with some insights that can help me and the rest of our team in figuring out how to optimize this. Token age consumed. This is measuring the amount of tokens that are being moved on a given day multiplied by the age that those tokens were sitting dormant at the time of them being moved. So it's essentially combining old tokens and amount of tokens and pinpointing exactly when a very large move is being made. Just like the top holders model that I showed, or I'm sorry, the top transactions model I showed, this is the top 5 biggest token age consumed spikes for each of these assets over the past year. The yellow bar here, these 2 big ones are Binance Coin. This isn't in terms of USD dollars. This is in terms of their average token age consumed versus the normal, what's considered a normal token age consumed spike on a given day. So on September 12th and 14th, it looks like there were 861 and 869 times larger spikes than what's considered a normal token age consumed movement. Absolutely massive. I won't go into what happened on those days for Binance Coin, but there was some serious volatility as a result of that. And as a bonus, what I like about Binance Coin is because it's associated with the world's largest exchange, there's very often a correlation with Bitcoin's price. Now, in these spikes cases, not really that big of a deal. It looks like, if anything, Bitcoin and had some serious gains right after these Binance Coin token age consumed spikes on the 12th and 14th. And the price went from, it looks like 10.3K to about 11.1K over the following week. So that's something I wouldn't attribute that to these Binance Coin token age consumed spikes very much at all, though. But when you do see a large one for Bitcoin or Ethereum, for example, that's when you want to take notice. Bitcoin had one on January 2nd, and the price at that point was 32,000. Now it's at the cusp of 40,000. So keep that in mind, and it can be very interesting, especially for smaller altcoins, like we're just seeing for Augur today. There was a very, very large one. In fact, it was the biggest token age consumed spike for Augur in the past year. So could be very useful information. These age consumed spikes, for those of you traders who want to know exactly how to react to them, they either mean that the price is about to jump really high or jump really low in most cases. It generally is a volatility marker, and more often than not, the spikes indicate an impending price reversal. So I know that Augur has been going up. Seeing this spike tells me that it's a bit of a red flag. It doesn't guarantee the price is going to go down, but it means that if you start to see a drop in Augur, this could be validation that it's going to be a big drop. Last up, and I won't get too much into this because it needs some updating as well, is thresholds crossed. And as you can see, I built this about a year ago when 20,000 was the all-time high. So I actually need to update this so 40,000 is the all-time high. And you can see here just how many times over the course of history, given daily closes, that price has been crossed above or below. So for example, 8,000 has been the most polarizing threshold for Bitcoin over the course of Bitcoin's 11, 12-year history. And it's showing that there's 35 total times that it's been crossed given daily closes. So this isn't just like, cross 7 times up and down in one given day, or a couple hours. It has to be over 8,000 one day and then under 8,000 another day in order to qualify as a cross. So this is still a really significant number, um, as it's showing that a lot of people sell when it goes over 8,000, a lot of people buy when it goes under. Obviously, the context has changed a lot when the price of Bitcoin is five times this. But given enough history, if prices ever reverted back to these kinds of levels, this $8,000 threshold would be very useful to know as a polarizing psychological marker for a lot of traders and how they behave around it. We also have this chart that actually shows the amount of days between the first and last cross. So for example, for the $1,000 level, it's been 1,216 days since the first cross and its last cross that's happened. So give or take, we'll call that 3.5 years since it hit 1,000. That's obviously a significant amount of time. Over time, these numbers will tend to go up. But I find it very interesting just from a historical context, and it can give you a little bit of trading insight, because it lends to this and talks about psychological levels and just how long it's been. Um, Generally, the higher the number, the more unrealistic uh, the crowd thinks that it will ever hit that number again. So I find that very interesting. Lastly, this is actually showing from a size perspective how long that date first crossed and date last crossed has been, and actually shows the date that it happened. So as I said, I only have this price up to date for up to $20,000, so it needs to be updated. But the first time that Bitcoin crossed 18,000 was December 16th, right at about that tail end of the big crypto boom of late 2017 that many of you first got on. And then the last time it crossed was just about a month and a half ago, maybe 5 weeks ago, on November 29th. So you can actually look at the amount of time that happened between them, and you can actually measure from a date perspective how long it took to get to that next threshold. I think this is probably my favorite part of this model. That being said, we've got 12 minutes. Hopefully there are a few questions and some of you are still here. If not, that's okay, and I'll just go over the models a little bit longer. So Gary, if you're around, feel free to let me know if there were anything notable asked, or if you have questions yourself. I'd love to hear.
Yes. So regarding the top holder supply model, could we compare that with Sunbase? For example, for Engine, our user reports that for Engine, the the magic amount held by top 10 non-exchange addresses is showing 20% on Sunbase. At the same time, the top holder supply model showed around 46%.
Okay, let's check it out on Sandbase.
Could it be our bug?
Hopefully not, but it's always possible. So I'm going to get off of holder distribution. Let me see. I can actually just I'll refresh Sandbase here. Go to ENJ. Going to make this a little smaller. And we're looking at top 10 holders, you said? For
Top 10
just overall?
non-exchange addresses.
Non-exchange, thank you. Top 10. Here's what it looks like over the last 6 months. Now keep in mind, this is the amount held by non-exchange addresses, and my model is showing the percentage of supply. So there is going to be a difference there. Hopefully they understand that when they're asking that question. But it looks like there's been a big drop just over the last day or two. And on my model, make this a little bigger. Engine, where is engine? Do I even have engine on here? Oh, there it is. It's bright orange, so it's going to be this one. So it looks like the top 10 off exchange whales are declining just over the last couple days, just like it's showing on Sandbase. So I think all should be correct if I'm understanding their question right. Maybe they can give a little more clarity as to what they mean, or if you understand it, Gary.
Uh, yeah, some clarification would be really appreciated, because it looks like it's still kind of unclear.
Yeah, it looks like it's matching. Long story short, there it is going down, which is telling me that the off-exchange top 10 whales are decreasing their stacks, both on Sandbase and on the model.
Brian, do you remember the model you showed before this? Because the user says it's the wrong model.
Thresholds crossed. Top transactions.
That model has had bars.
This one? I'm checking the chat. That was the model before that one with the bars. I'm not quite sure which one he's referring to. Could he explain what the model was trying to solve? Multiple bars, 1 week / 2 week. Still don't know. Got to use a few less abbreviations. That was top 10 holders, and it showed 46%. Top 10 holders, 197% held, total supply on Sandbase. Aha, okay, I see what he's saying. So right here on Sandbase, he's saying that the amount held by top addresses, the top 10 in this case, is at 46.7%. On the model, this is not showing what you think it is. This is actually showing the cumulative change over the last 30 days. So it's basically a percentage of a percent. So what would be more useful for you is to look at this, and this is going to match it perfectly. This is actually showing their percentage held over the last 4 weeks, and it's validating at 46.74% as of today. And as of 3 weeks ago, it was at 46.94%. So for actual raw percentage held, you'll want to look at these models here in blue. And for actual percent changes, just to see, the reason they're like this is so I can have all of the assets on the same axis, so to speak. So if I were to put these percentages on the same axis, status would just look like it's higher than everything else. So to adjust for that, we have to have a percent changed of these percentages over time. So it's essentially measuring for engine, what's the percentage from 3 weeks ago when it was at 46.94% versus today, 46.74%. And the answer is that it's declined by just a tiny bit, by 0.2%. And in terms of percent change, that would be 0.8% of that 46.7, whatever the number was. Hopefully that explains. Long story short, this is essentially just putting everything on the same axis to show what the percentage change is of their percentage held. I know it sounds complex, but if you want to get more of a snapshot this way, this works just as well. Any other questions popping up?
Not yet. Looks like no more open questions in chat. But I have a question myself.
Of course.
We have a nice variety of models now in Santiment. Which ones could be most reliable for, say, swing traders, day traders,
Mhm.
and which ones could be a best fit for long-term investors?
Yeah, that's a great question. I would say the number one most important is going to be the MVRV model. MVRV essentially measures what uh, what the average trader returns are at any given time and how successful average traders are in a game that is essentially a zero sum game. Over time, all different time frames of MVRVs are going to average 0%. So when you see something like this across the board for 30-day MVRVs, it's a caution flag that basically says, all right, traders are thriving too much right now. They were expecting prices to go up, and they did. Uh, but normally, the average trader breaks even or even loses a tiny bit. So we are in an abnormal state right now where people are profiting more than they typically do based on a historical basis. That's considered a danger zone. And when looking at this, it confirms that. And Bitcoin, Ethereum, and actually a lot of things have adjusted since I showed it earlier. So this is actually the true numbers now that everything is refreshed. But yeah, long story short, Bitcoin, Ethereum, Maker, Synthetics, a lot of coins that have really been thriving over the last few days are going to be the ones that are showing most red sometimes, but not all the time. A lot of this is due to the fact that just their 1 day MVRVs are looking really good right now. But um, this is a really good one for swing trading because it gives both a short term and long term perspective on how much of an opportunity or high risk versus low risk there is to get into a new investment in one of these assets right now. So I really love it. Another one is the one I just made. I think this holders change one is going to be a really big deal um, because it's giving insight as to what whales are doing, not just how current whales are behaving, but how many new whales under, a bit of an arbitrary definition for what a whale is, but how many new whales are being created over a 3 month span. Um, I think it's just really good information to have, and prices tend to follow along pretty well. If I isolated something like Maker, for example, where was it? Maker is sort of pinkish. This one. So Maker started going up just about 2 days ago, I think on the 5th. And you'll notice Maker was one of the um, highest ones on this chart in terms of new whales that were entering into that 10K plus tokens held sphere. And I don't think it was a coincidence that Maker has really taken off, gotten over about 1150. I won't look at the prices right now, but it's been one of the leaders over the last 24 hours in particular. And I think that this model has a lot to do with it because whales are going to be the key holders to prices more often than not, and they always will be. Um, exchange percent supply is probably my other favorite, along with NVT and DAA, but these are more long term. And DAA, like I said, needs some work. But exchange percent of supply, I think, is incredibly useful because it's showing and validating why prices are going up as much as they are right now. Many tokens, especially Bitcoin, Ethereum, um, actually Bitcoin is starting to move back to neutral now, so keep that in mind. But many tokens, at least over the last few months, were dripping into this green below zero space, saying that over the last year, more tokens compared to the average over the last year were off exchange instead of on. And when tokens are on exchanges, that tends to be when you see big drop offs because there are plans to sell or transact for a different token, that kind of thing. So um, I'd say these top three right here, MVRV, holders distribution, and exchange percent of supply are great starts if you want to check in on them on a daily basis with your API key. You'll find some pretty cool little nuggets of information before the markets actually react a lot of times using those three. So highly recommended. And yes, Vevictus, definitely plug it in yourself, and get on Discord and just let us know if you have questions or need some clarification on some of the models that we put together. And if you want to refine them or think they can be more useful with a few tweaks here and there, let me know. I'll even jump on the chart with you and try to figure out what kind of formulas we can make better, or how to visualize them better through the charts that currently exist. That being said, guys, I think we can end this webinar for now, but I really appreciate those of you who stuck around. I know we had anywhere from 15 to 25 of you on here. That was actually a little more than I expected, because I know this is a bit of a niche subject that mostly Sandbase Pro members are going to be interested in. But for those of you who aren't Sandbase Pro members yet, consider this pretty good incentive to give it a try for just a month. For $49 a month or $45 a month for a year, you get access to basically plug in all of the Santiment metrics directly into Sansheets/Google Sheets. And if you're a spreadsheet user, this is going to be tremendously useful and helpful for you in coming up with insights that the rest of crypto can't see. And that's what we're all about at Santiment: finding where the markets are going to go before that local top or local bottom hits. And with your help, and as our community continues to grow, I think these models are just going to become more and more powerful. So really thanks to those of you who were able to check this out and join me today. All right, Gary, Max, thanks for helping to coordinate this call with me, setting up the YouTube stream. And we'll try to do this again in 2 to 4 weeks, guys. As you guys request them, we love to jump on these webinars and just teach what we can about what we're learning about the markets, as well as how we're trying to use our data in new and innovative ways. So thank you very much, and we'll be talking to you all on Discord, on Twitter, and on Intercom, anywhere else you want to contact us. Talk to you all soon.